Good evening, everybody, and welcome to RFL. I'm Richard French, and thank you for joining us this Monday. It is now not just a trade war. President, he has now pushed the United States into a tariff war with one of our largest trading partners. I'm talking, of course, about China. On Friday, as trade talks broke down, the U.S. decided to double down. They increased its tariffs on products from China, and they began expanding the list of products that we slapped tariffs on. In response, well, China did the same. That caused the markets to have a sell-off. But Trump, he keeps downplaying it all, saying that Americans, they won't pay for his trade mistakes.
Our country can take in $120 billion a year in tariffs, paid for mostly by China, by the way, not by us. A lot of people try and steer it in a different direction. It's really ultimately it's paid for largely by China.
Well, among a lot of people saying that's wrong is people that work for the president. That's not how tariffs work. Trump's top economic advisor, Larry Kudlow, he said as much, and he did it on all places, Fox.
But Larry, that isn't true. It's not China that pays tariffs. It's the American importers, the American companies that pay what in effect is a tax increase and oftentimes passes it on to U.S. consumers.
Fair enough. In fact, both sides will pay.
But the president says China doesn't. China, it pays the tariffs. They may suffer consequences, but it's U.S. businesses and U.S. consumers who pay, correct?
Yes, to some extent. I don't disagree with that.
Translation, my boss was wrong. Now, the markets, they seem to agree more with the Kudlow take than the Trump one. It was the worst day for stocks in more than 4 months. Both the Dow and the S&P were off by more than 2% today. The tech-heavy NASDAQ, which includes Apple, which could get hit hard in this tariff conflict, it was down nearly 3.5% just today in trading. So for more on the tariffs, their impact, and what could happen next, I want to bring in our senior political correspondent, Andrew Whitten.
And Rich, the tariffs, the increased tariffs that we're talking about, for the most part, will go up on June 1st. Unless both countries change course. And it's important to note this is all happening in the shadows of trade negotiations between the U.S. and China. And there are real issues. The biggest is intellectual property theft. The Chinese hack, steal, or copy a company's design on something, then mass produce it at lower costs and undersell American companies. That's the main issue that Trump has been trying to move Chinese President Xi on. As for Trump, like almost everything else he does, it's not clear how much of this is an empty threat and how much is posturing to try and gain negotiating leverage over China. But having said that, the U.S. has already moved on some tariff increases with real-world impacts for every American. Here's what Trump announced on Friday: increased tariffs on $200 billion worth of products we buy from China. The duties will go up from 10% to 25%, and as Larry Kudlow confirmed, those costs will be paid by American consumers and companies that import from China. By some estimates, the tariffs that we've just raised will already cost the average family of four $767 more a year. And if Trump issues wider tariffs, that bill could go up to nearly $2,300 a year per family. It could also put 1 million American jobs at risk. And here's why those added costs would be nearly impossible to avoid. This, what you're seeing, is an incomplete list of products impacted by the higher tariffs, and there's a lot of them. From air conditioners, appliances, and auto parts to clothing, furniture, TVs, even toilet paper could see what is, in effect, a tax increase. Then today, China announced its first retaliatory tariffs on American products that it imports. They're targeting $60 billion worth of American goods for now. And like Trump's tariffs, they're raising their duties from 10 to 25%. So those fees will be paid by Chinese consumers and companies, which means fewer American products will likely be sold there. Among the 4,000 products that China has targeted, beer and wine, cotton and grains, 2 American agricultural staples, even airline parts and liquefied natural gas. That continues China's trend of targeting industries that are key in red states, states that Trump won. It's a scary proposition, scary because of the hit that consumers and the economy will take when these go into effect, and even scarier when you consider what could happen next. Best case scenario is that both sides reach a deal and call off their tariffs, but if not, Trump has already threatened to expand tariffs to all Chinese products. That's another $300 billion in imports about to get more expensive. He wants to put tariffs on everything we import from China. China could then do the same. They could also halt all American purchases of American agriculture, energy, and aircraft. And they could stop buying our treasury bonds, our debt, which brings us to the scariest possibility of all. Not only does China stop buying our bonds, they could decide to sell off the Treasury bonds they're already holding. That's got a value of $1.13 trillion. China holds 28 cents of every dollar of U.S. debt held by other nations. They own 5 cents of every dollar of American debt, period. Rich?
Andrew, thank you very much. And let's bring in our guest tonight. We're joined by Vice President Joe Biden's former chief economist, Jared Bernstein. Now he's a senior fellow at the Center on Budget and Policy Priorities. Jared, thank you very much for a few minutes. I appreciate it.
My pleasure.
Well, as best we could, we laid out and tried to separate some of the rhetoric and reality, and the stakes certainly high. Let's start this way. I think there's a legitimate argument by the president and predecessors of both political parties that China is not an honest broker when it comes to trade, whether it be intellectual property. They don't set fair markets. That said, is the best way to get a fair deal blunt force trauma? Is the president going about this the right way?
I don't think so, in the sense that the president's tariff policies are hurting so many American consumers and businesses and don't seem to be really getting the kind of deal out of China that they want. Now, we're in the middle of this, and I think what you can say on behalf of the president's negotiators is that they, and I'm thinking of Robert Lighthizer, that's the president's chief negotiator, have certainly pushed the Chinese a lot further than any of their predecessors. They can say that, and that's legitimate. But boy, I and pretty much nobody else sees a real deal in the works here. And as we've said, the pain that it's engendering to American consumers and businesses is real.
And as Larry Kudlow pointed out, I mean, he basically said his boss was wrong. But I think it's important. Do we think the president knows he's wrong here? Do you think this is all bluster, or does he really believe, throw a few $billion here to the farmers, give them a few more subsidies, that he can paper this thing over? Or does he believe that this is just a negotiating tactic?
Good luck trying to get inside Trump's head on this or any other matter. I do think, though, something you said is important, and we should keep it in mind. Trump tends to ratchet up these trade wars when he believes he has a strong economy and a strong stock market behind him. In this regard, he's kind of playing with house money. The stock market's been strong, so if it has to lose 1,000 points so he can, in his mind, win another round of the trade war, he's willing to do so. The unemployment rate is at close to a 50-year low. The GDP is percolating along. So again, he feels like he can sort of push the limit a bit given that economic backdrop. But again, if you look at what he's trying to accomplish here, I don't see how he gets there from these kinds of tactics.
And more than that, if I'm the Chinese, I think a couple of things I go into this with the president. First, I've seen this guy blink before. He blinked on the government shutdown. He blinked on the wall issue. And moreover, I call on my loans here. I'm holding a lot of U.S. debt. Now, I know that's a double-edged sword, and it's not good for the Chinese as well to do that. But they do have a little bit of leverage here, don't they?
Yeah, I think that when the conditions that are kind of motivating Trump to push these extra tariffs right now, strong stock market, strong economy, strong job growth, if those were to fade, I think we'd see a different story. Look, on the Chinese debt issue, I actually don't think that the Chinese are going to dump a bunch of American debt, because that just lowers the value of an asset that they're holding. But if they do, there's actually pretty strong demand, they call it a flight to safety, a pretty strong demand for American treasuries. So I'm actually not worried about that piece of the puzzle. I don't find that threat to be too much of a deal. But I do think that if the strong wind of the markets and the economy is no longer behind President Trump, your intuition is probably correct. He may start to back down.
And I think it's interesting, and for anyone who thinks the person on the other side of the table is an idiot here, the Chinese do know what they're doing. They're targeting their tariffs primarily on the manufacturing and on the ag side here, which are red states. And the president, he looks at the market, he talks about the economy, and he says, judge me on that. And in a lot of cases, at least with his base, they'll forgive the rest of it as long as he delivers those two. If all of a sudden now that narrative goes away with a year to go and change to the election, that's something I don't know he's got enough discipline and really conviction to stick around for.
Well, perhaps. But, I think the scary thing here is that, you and I are applying a pretty rational analysis to this. At the end of the day, what you really might have here are two very powerful protectionist, mercantilist, in this case, mercantilist meaning import-driven, protecting their countries against export-driven leaders who are just going to be at loggerheads regardless of what else is happening. So, while I think probably the smart bet is that eventually this kind of fades as these leaders, President Trump and President Xi, back down, there's a scenario out there where they don't, where they just escalate the trade war because at the end of the day, they want to sell exports and block imports, and they could actually get into a kind of a bidding war here where it could end up really in recessionary territory. I don't predict that as the most likely outcome, but it is a dangerous possibility when you start fooling around with trade wars.
And you can't separate the nationalism that the president has had here since he was a candidate and showed no sense of backing up as we look at international trade. The idea that you can wall off your country, in effect, and just sell and not buy, it doesn't work that way in the 21st century. I mean, isn't that part of the problem here, is that we're fighting basically a fight that's already been settled? We are a globalized world, whether the president may like it or not.
No question. I think it's actually a fundamental point. The way I put it is that you can't, at this point, unscramble the globalization omelet. And the evidence for that, by the way, is just how much these tariffs are hurting American producers. And the reason they're hurting them is because many of the so-called intermediate goods, meaning the things that producers use to build their machinery, their engines, their bicycles, something that requires steel from abroad, for example, or so many of the Chinese electronics imports. When you slap tariffs on those, you're raising the cost of production for American producers. And that is very much a function of this mature globalization trade flow world that we live in. And Trump has this vision of import substitution. That is, if you throw the tariffs on these goods that are coming in, American industry will just stand up and quickly rebuild them themselves. It's not going to happen, and that's yet another reason why I think this is largely a destructive endeavor.
And today's story might have been the markets, but it's going to start hitting the pocketbook sooner than later, and we're going to see how that same public reacts. Charles Bernstein, thank you so much for the few minutes. Like I said, I appreciate it.
My pleasure.
All right, everybody, when we come back here, from the growing global trade war to the president's battles back here at home, he's still at war with Congress, refusing any cooperation with a slew of ongoing probes happening on the Hill. We'll talk about the legal aspect of that when we come back, but also what we're going to talk about is, what about the political play here? What do Democrats do now? We'll turn to former federal prosecutor straight ahead to say where this all goes from here.